And here we'll take a look at the data released over the European session. Been a fairly busy morning with plenty of data coming out of Europe and the Eurozone as a whole, but I've just picked on three or four main points that took my eye. First of all, starting with German GDP. These were the numbers for Q1 2015. And they were better. They were up 0.3% quarter on quarter and an annual increase of 1.1%. However, that number was somewhat slower than analysts were expecting, and it's something of a disappointment there. Counterbalanced, though, to some extent by the numbers out of France. And we spoke about the French GDP, or the prospects for French GDP growth yesterday after the Bank of France survey, and here French GDP was actually up 0.6% quarter on quarter, and that was well ahead of what had been forecast. Well, it wasn't a happy picture across all of the Eurozone, unfortunately. Finland has slipped back into recession. Q1 2015 GDP here falling by 0.1%. It may not sound like much of a dip, but that was the second negative quarter in a row, and of course that meets the criteria, shall we say, for a technical recession at least. Closer to home then, we had the much anticipated UK inflation report. Mark Carney speaking about the economic prospects for the UK. Perhaps somewhat surprisingly, the Bank of England actually cut its forecast for GDP growth in 2015. Not by too much, but still it was trimmed. They did hint that we won't see a rate rise until Q2 2016. There was also a suggestion, of course, that inflation could yet dip lower from the 0% bound that we saw in March and April, and perhaps go negative in the short term at least. Mark Carney suggested that was possible. So a mixed bag there. Cable took most of that news in its stride, I think it's fair to say.